All right. So, what drove the market up on Friday was the U.S. jobs report. It showed a cool down. So, you can see over the last year, it's been over 200 or very close to 200 for several of the months, especially the last 4 months, hitting a record over 300,000 new jobs available. So that was bad news for the market. So we saw a little bit of a pullback on the market. Now there were only 175 new jobs added for April, which gives the Fed possible reason to stop raising rates and cut interest rates. So that's right. The government wants to see a cool down in job opportunities. Not only that, the Fed and the government want to see the jobless rate over 4%. So if we can get it over 4%, that will probably be the news that will help to cut the rates. But me, I don't want to see less jobs. I want to see more jobs. But our Fed, our government, wants to see the jobless rates come down, wages come down by having less jobs available, and increased unemployment drive the wages down. That's what the Fed and the government are hoping for, uh, if you can believe they're two different entities. Anyways, you have unemployment record lows for the last 28 months or something. Never in history have we had unemployment under 4% for such a long period of time. So, how did that affect the market? Well, one of the leading factors that affected the market was Apple after its stronger than expected earnings report on Thursday. So, Thursday at 1 p.m., Apple announced its earnings, as well as Amgen and Live Nation. All of them beat expectations. So, Apple, being the last of the Magnificent Seven to announce its earnings for this quarter, still didn't do as well as the other two here, Amgen and Live Nation. They also announced earnings right at 1 o'clock. So, how did it affect the market? So, the technology funds for the direction funds jumps up 8% on Friday in one single day. You can see it was already up first thing in the morning before most investors had a chance to invest, and it pretty much held steady throughout the rest of the day. So, a 5 day outlook here, back on Wednesday when I said I bought when it was down because I'm anticipating other semiconductors to make announcements to help drive the QQQ and the semiconductor sections up. You can see immediately on the news again, it shot up to 435 for the QQQ, which, by the way, if you're 20 some years old, this would be my number one investment. I would have been buying on every dip I can. I keep saving money and I buy on the dips. You have the semiconductors also shooting up to almost 40 points immediately on the news, and you have small cap sectors, which I'm expecting to do very well if it looks like the economy is going to uh, get interest rates cut and then have a strong economy. I'm expecting small cap sector and mid cap sector to capitalize on that. Again, you can see how they immediately got big profits immediately on by 5:30 in the morning, and then profit takers came in. Same with a lot of these other funds. It shot up to 38 and then it settled down to 37 as the profit takers came in and took money off the table. So the Nasdaq again shoots up almost 18,000 points, over 5,000 points for the S&P, 38.7 for the Dow. And Apple, not only on its earnings, gets this great news just in time, so it shot up 8% from up to 185 immediately Friday morning at 5:30 in the morning. And then you have the biotech also shooting up. Now, it may not look as dramatic, but if you look at the 5 day gains, it's 24 or 25% up versus Amgen, who got 15% up for the week, but really within a matter of seconds got its 15% jump. But it's a biotech fund or biotech stock, which I buy the ETF for the biotechs, which usually means a higher rate of return when the market is going up. So even though Amgen was leading the way for all of the biotech sectors, the LABU Directions Biotech Fund is up 24 or 25%. So what happened on Thursday at 1 o'clock? The earnings were coming out for Apple. This was before the actual announcement. Then they announced that revenues were at 90.7 billion versus the estimate of 90.3 billion, and more importantly, they did great in China at 16.3 billion versus 15.9 billion. So the funny thing here that they don't tell you is these are off lower expectations. So last quarter, because they had poor earnings, they lowered their expectations for this quarter, which enabled them to beat the expectations now. So this is beating the lowered expectations from lowering their expectations last quarter. So take it for what you will. But that's really what is driving the market. It's all about perception in the market. And the perception is Apple is looking for strong earnings to come in for the following quarters because they've already lowered their expectation. So that's pretty much what happened. And immediately after that announcement, you see that it jumped 6%. So its biggest gains already had happened by 1 o'clock on Thursday afternoon. And then by Friday morning, more news came out and it drove the stock up even higher.